Imagine it's 8:30 a.m. EST and non-farm payrolls just dropped. You are frantically refreshing news feeds, squinting at a 1-minute chart, and trying to process a dozen conflicting signals at once. The human brain physically cannot process that volume of chaotic data in real time. The immediate result is analysis paralysis, followed very quickly by severe emotional fatigue. This exact cognitive overload is the primary reason 90% of retail traders wipe out their accounts. To cope with the stress, many traders turn to fully automated algorithms, the classic black box bot that promises to generate profits while you sleep. But rigid algorithms rely strictly on historical data. When a black swan event hits, these bots blow up entire portfolios because they possess zero situational awareness. Survival in the 2026 market involves a hybrid approach known as the Centaur model, offloading the heavy computational lifting to machine learning while keeping final decision-making in human hands. Fundamental analysis often turns into a bottleneck. Manually digesting dense central bank minutes or scrolling through newswires takes hours of tedious reading. Large language models act as highly specialized macro analysts. You can feed entire transcripts of these dense policy discussions directly into the model. Within seconds, the AI synthesizes that raw text into a single actionable sentiment score, allowing you to clearly identify exactly what institutional players intend to do with interest rates. Technical analysis introduces a different set of risks. When you desperately want a trade to work out, your brain will mentally bend a cluster of candlesticks into a pattern that validates your desire to go long. Automated confluence scanners eliminate this problem. They apply rigid mathematical pattern recognition that does not care about your emotional state. The software simultaneously scans 28 currency pairs, rapidly filtering noise to isolate specific setups. Zooming into these pairs, the algorithm flags only statistically significant support and resistance levels, completely bypassing the human urge to force a setup. By assigning both macro data and technical charting to machine learning, you transform a paralyzing flood of market noise into a highly targeted, objective strike list. Once a trade is found, retail traders make another critical error, obsessing over whether the price will go up or down, while entirely ignoring how violently it might move. Predictive analytics solve this by tracking the average true range, a measure of daily price movement, to forecast upcoming multi-year volatility regimes. In dynamic position sizing, the system detects an impending spike in market volatility on the left and automatically calculates a proportionally reduced lot size on the right. This ensures your total risk exposure remains perfectly flat, mathematically containing your potential loss. The final barrier to execution is your own subconscious. Subconscious behavioral tilt, like revenge trading after a loss or hesitating on valid entries, slowly drains capital from your account. AI-enhanced journaling tools audit your entire trade history to find these exact behavioral leaks. The software pinpoints the specific days of the week and times of day when you are statistically most likely to make poor decisions. By systematically neutralizing volatility risks and cutting out behavioral tilt, machine learning upgrades your trading from an emotional gamble into a hardened, institutional-grade business process. By 2026, the performance gap between traders utilizing AI and unassisted manual traders has moved beyond a simple matter of convenience. It is now a structural advantage. Machine learning now dictates the pace of the financial markets. The choice for the individual trader is whether to direct that machine or be liquidated by it. To upgrade your edge, visit the FXNX ecosystem and download our AI Trader prompt sheet to start building your own work.